Good morning, everyone. Good morning. Good morning, good morning, good morning. All right. So we have a lot to discuss. Can everyone hear me okay? I just want to do a quick mic check. I traveled this weekend and I just want to make sure that the mic is working. So just let me know. Let me know. Let me know. Good morning, everyone. Good morning, good morning, good morning, good morning. So, yesterday, let's talk about it. Yesterday, one of the worst days in the stock market ever. So, yesterday sucked. Yesterday was really, really bad. Check out the VIX. Pay attention today. I have a lot to go over. Try not to miss anything today. Try to stick with me for half an hour, please. Okay? Please, please, please stick with me for half an hour. This might be incredibly beneficial to you. All right? So, let's just dive into technical analysis. Obviously, the market is not in good health, right? Current administration policy is not conducive to market growth. What do we have on the VIX? Most of you don't even know what the VIX is. The VIX is a measure of volatility, not over time. It is an it's a volatility indicator. Let me go over something real quick. This is called the Fear and Greed Index. I went over this last session. I talked about just exactly where we are in terms of sentiment. This shouldn't surprise anyone. We are in extreme market fear. Now, this doesn't necessarily mean that, we're not going to trade anymore. For those of you crypto people, the crypto people also are feeling it, right? Any sector, all the sectors. The only sector that right now seems like it is holding water is going to be the bond market. So rotating out of equities, going into bonds. What do we have on the VIX for right now? What do you notice on the VIX? I promise this is going to make sense in just a second. The VIX spikes every time that there is rampant fanaticism, right? So we're pretty fanatical right now. We're fanatical to the downside. We have had selling pressure like you wouldn't believe. We're going to talk about Tesla in just a couple minutes, but notice on the VIX, you have sustained price action from 15 all the way up to 27. Most of you know that I like to short the VIX. I will be doing that. Okay. So in a little bit, I will decide probably about above 30 that I'll probably be shorting it. Cool. All right. So now let's go here to SPY and QQQ. So what do we have right now on SPY selling off? First of all, let's do a measurement here. Let's say from here to here, we have almost a 10% roll off. Okay. So this 10% roll off kind of puts us technically in a bear market, right? We're pretty much on the precipice of that. So what do we have in terms of levels overall? I want to actually refer here to the voodoo lines. So let's check this out. I'm going to be perfectly honest. I have not caught shorts at all here on the indexes. Let me remove some of these indicators. And let's just look at this because this was recently updated. These are not going to be accurate because this sell-off here were not part of the calculations on the voodoo lines. So I'm going to actually remove these, and we're going to just look at the moving averages. You guys can more or less see exactly where the levels are on SPY. I want to go over SPY in particular because I think the numbers are going to be nice and round. But let's check out the daily here. What do we got? For levels overall, right? I had levels on SPY at 570. I'm sure most of you had levels around 570 as well. We broke below that quite significantly. We had an open yesterday of about negative 2%, and we cascaded down lower. I believe at one point the Qs were down 4.75%. I apologize if the chart is a little too busy. I just want you guys to get a feel of where some of these voodoo lines are. I'm going to remove them right now because they are very busy. Let's get rid of that, and let's also get rid of that. So I have a couple levels that I would like to point out, right, if you guys will permit me. Give me 1 second here. We definitely know what the VIX is. Why do condescending people? Not everyone knows what the VIX is, so don't assume that people know what you know. So I'm not being condescending at all. If you know me, that is the last thing that I am, right? I don't condescend people. I help people. So let's continue. We have a support level approximately right now at $560. The pullback is significant. Now, the 10% pullback range generally is where institutions or just us in general are looking to buy into long dated or dollar cost averaging, right? That's typically what it is. I don't necessarily see the support quite yet. I don't see it quite yet. I know that we had a pretty significant bounce here for futures. If you guys are looking at the bottom of my chart, you see where my cursor is. If you see that, I don't necessarily see the support quite yet. We rolled over pretty much all the most important stocks that we have in the market. Okay, so Amazon trading at 190. Tesla, don't even mention Tesla. Tesla is almost 50% off of its previous highs. So in terms of support, if you guys are supply and demand traders, the supply and demand, well, demand more in particular, is close to $545. I know that that is an aggressive price target. It really, really is quite aggressive. I don't really see anything subsiding, not even for CPI or PPI this week. So those are going to be two extremely important economic indicators, right? I know that Powell came out last week, and this is where we saw a little bit of a bounce, close to $575. But for right now, it doesn't really look like that price action is really seeing any merit, seeing any support. I am interested in taking calls again on SPY, but I'm probably going to do it. I'm probably going to do it on a second higher low. I haven't seen that so far, at least not on the 4-hour time frame. Does everyone see what I'm talking about here? I have a support at $565. And then I also have another support at $545, and then there's another one at approximately $538. Those are the two areas that I would probably watch quite closely. Let's see exactly how much we need to sell off in order for us to get back down there. That is an additional 3%. I know that traders have a tendency, and I'm part of this group as well. We have a tendency of always wanting to try to catch the exact bottom or guess what it is. It's just the nature. It's human nature. I don't want to try to guess the bottom, and I actually would recommend that most of you try not to do that as well. If you have been buying the dip, or if you have been just dollar cost averaging into your positions, I'm not going to really say this for crypto people because crypto people think about markets very differently. Crypto people, they buy in. As soon as it pulls back 10%, they want to buy in, buy in, buy in. I'm usually against that sort of thought process or that methodology because crypto is a lot more volatile than just stocks in general. I want to dissuade you from that as well on the indexes. What am I saying? I'm saying that you have not created any support. And if you think that the tariff situation is going to go away anytime soon, I think you might be incorrect. The tariff situation is not going to go away for the next 3, maybe even 6 months. Does that mean that we continue into this bear market for the next three, maybe 6 months? There is a possibility to that. Okay. Notice the 10-year yield. I just want to go to TNX here real quick. Some of us are not monitoring the 10-year yield. I am right now because I'm in the bond market, but the 10-year yield has been selling off really hard. All right. I'm going to go over IWM here in just a second, but the 10-year yield selling off and the Dixie selling off very hard as well. This is usually some pretty good indication about where the stock market might be going. Look exactly how hard we sold off on the Dixie. And this was just in, a couple days, man. This is just really, really in a short period of time. The same thing with SPY. So before we start dollar cost averaging or starting to think about buying calls on SPY, obviously there's going to be undulations here. There's going to be little short bursts and rallies, but to call a bottom out here before anything substantial has changed fundamentally, and what I mean by fundamentally is those tariffs are not going to go away. They're really not going to go away unless he says, we're done here, right? Because right now the Prime Minister for Canada, at least the last one, he's gone. So we have a new one. I don't know if anyone caught comments on the new Prime Minister. He's basically saying we're not going to be bullied. So now we're in a trade war. That's exactly what we're in. So in terms of levels overall, that's the gap fill lower. We have been filling gaps left and right in the market. Doesn't matter what stock you trade, what your darling is, NVIDIA, AMD, Tesla, doesn't matter. Okay. All of us thought that support was going to be close to 570. All of us were wrong. Unless you caught shorts or unless you're up in the last 2 weeks, then fantastic. But 94% of people were not we're not short the market, right? Everyone's holding on to their long positions. And obviously, everyone is frantic right now because we don't know exactly where the bottom can be. My best guess is going to be around here. This is where I think institutions start paying attention to start building up their long positions once again. Have I been seeing institutions rolling out of their positions? No, I have not been seeing that. I've been looking at my dark pool data, and I've specifically been looking at longer dated calls. I haven't been seeing substantial institutions rolling out of the positions, but there are outflows out of tech. Let me explain what outflows are. Outflows are going to be rotating from one sector into another. If we're trying to guess what those sectors are, we're rotating a little bit more into healthcare, and energy has also been rotated into consumer cyclicals a little bit as well. So rotating out of tech, right? We're rotating out of Microsoft, rotating out of Apple, rotating out of SPY. SPY is not tech, but of course it does have tech stocks in it, right? The biggest tech stocks in the world, and more so QQQ. So I urge you to please consider, instead of buying the dip and wasting all your ammunition on, putting 10, 20, 50, 100, $200,000 into a position, be careful. Be careful doing that because we might still see more downside. All right. This is just a prediction. This is just my opinion. Doesn't mean that you have to agree. Of course not. You don't have to agree with me at all. I'm just cautioning you. I'm cautioning you because in the last 2 weeks, my positions haven't done well. They definitely haven't done well. I wasn't long per se the market, but the positions that I had are not benefiting from this drawdown as quickly as we have been seeing. So now let's translate that to QQQ because most of us are interested, including myself. I'm more interested in the Qs than I am in anything else. So right now, I believe we are technically in a technically bear market right now on the Qs. Cool. I know that CNBC is not going to call out a bear market quite yet, but from a technical standpoint, we are in a bear market on the Qs. What is support on this right now on the daily time frame? Let's go over some of these levels. You have a gap to be filled back down to 450. That probably is going to be my most immediate target. Okay. So that means that there is another potential for about a 20, 25 point drop. So does that mean that we're going to see that straight from here? No, more than likely we're going to see very strong bursts of rallies and then probably starting to fill that gap closer to about the $450 level. Why do I say that? Because at the $450 level, you are now in that 20% pocket, right? Very close to it. Actually, about 17, so not perfectly 20%. Anything lower than 450, then you're looking at approximately right here. You're looking at approximately that gap to be filled back down to 430. Are those aggressive targets? Yes, they are very, very aggressive targets. It's okay if you do not agree with me. I actually, for me, I'm indifferent to what the levels are going to be hitting. I'm just going to look for capitulation, specifically with the price action that we've been seeing aggressively sold to the downside. Have we seen this before? Yes, we definitely have seen this before during July all the way to August of 2024. So this price action, if you've been trading long enough, yeah, it is aggressive for sure, but it doesn't necessarily mean that it's going to continue forever. In terms of order flow on the indexes, I do want to show you guys this because I think it's important. Let me go to my order flow tab. Let me just find where it is. I don't have it open right now. So, all right, I'll do order flow on Thursday because I don't want to waste too much time because I got a lot of stuff that I want to go over. But realistically, 450 will be the target. So if you are a buy the dipper or if you are a long-term holder, I would recommend that you wait a little bit. If you're a short-term trader, you're going to be on the 5-minute or 3-minute time frame. So for you, it doesn't matter. If you're not holding positions overnight, then you're not really that worried. You're just looking to trade the 8 and 21 crossover, either long or short, right? That's your strategy right now. If you are like me and you have some capital that you want to park into certain positions, Qs is going to be a candidate, but it's not going to be my favorite candidate. I'm going to talk about those here in the last 15 minutes on the back end of the session. So right now, target is 450. I'm not going to spend so much time on IWM. We have another signaler at HighStrike that is just as interested in IWM as I am. I hit my first target at 202. One of my targets were 208. Right now, my second target is going to be at 190. All right. I think 190 is a reasonable target for us to start seeing more relief or some sort of bounce. I don't have a target all the way back down to 175. I mean, if we do sustain a bear market for the next 2 to 3 months, as I'm anticipating, then 175 is on the table. So that's a 25-point drawdown. But let's take this one step at a time. Let's do 190 first, and then we'll go from there. Many of you know that I make a lot of money on DIA when the time comes. DIA has hit one of my targets. It hit 419. The target below 419 is going to put me at approximately 408. All right. So 408, anything lower than 408, hitting about $400, then DIA, what I'm thinking is this resistance level that we broke out of, and then we broke out of this area twice. I'm thinking support level approximately around $400, but 408 would be first. Okay. The DIA is not as weak as the other indexes. It usually isn't. It's usually a little bit more well behaved. Just check this out on the weekly time frame. If you got your weekly time frame, you know exactly why I like trading DIA as much. I just wait for it to trade down low enough, and then I take positions on this and usually do quite well. I have a very good track record when it comes to DIA. So those are the levels that I have right now on the indexes. What am I looking to buy into, right? What do I want to take? I'm going to give you my top 5 stocks that I would like to take positions in, but I'm not going to be doing it right now, right? Consider my comments that I made about 5-10 minutes ago. I'm not looking to buy the bottom quite yet. I am under the impression that market conditions are not going to subside anytime soon. Not anytime soon. You might disagree. You might say, Sage, you just showed us the fear and greed index here. This is traditionally the best time to buy. You're not wrong. You're definitely not wrong, but you don't see capitulation on SPY, and you definitely don't see it on Qs. Okay. So I would actually recommend that you wait just a tiny, tiny little bit. All right. Let's go back here to the indexes. First and foremost, this should not be a surprise. I know most of you are very interested in getting into NVIDIA. I called out NVIDIA at 105. Okay. We hit 105. I regrettably did not hold on to my 105 position on NVIDIA, and here we are. So it's just a position that I didn't make money on. On your daily time frame, your support level is exactly 102. The next support level is going to bring you back down to approximately $95. All right. Fair valuation on NVIDIA, let's not even discuss that because it is obviously overvalued, just like any other stock in the market. But in terms of tech stocks, it's probably the one that's most fairly valued in the market. Why does that even matter? Because institutions like fair value stocks, especially when they're trading at close to fair value valuation. So NVIDIA is definitely candidate number one when it comes to this. What do we want to start buying into NVIDIA? About $95. And then the lowest point that I'm considering right now is 87. I don't think that the market will take it back down to 80. These are just my opinions, okay? I'm just sharing my opinions with you. You do not have to agree with me. I'm just letting you know per my strategy and per the things that I like to look at, right, for the last 15 years. These are generally things that I'm looking for before I attack a long position. I'm looking for something very comparable to what you guys see here. I'm looking for a cross on the 821 and 34-day moving averages. Also consider this. I'm going to put on a fib right here on NVIDIA. If you guys don't know what Fibonacci's are, they're just basically retracement levels. I'm not going to go into too much of the technical detail, but I will explain what I mean when I say fibs. Let's consider this run right here. So that's our starting point. If you are a fibs trader, you're going to get this real quick, right? You might anchor your point a little bit differently than me, but bear with me. So that's my anchoring point and that's my high, right? Right now we're right at the golden shelf. We're literally right there. So we haven't given it up. If you look at Tesla, if you look at Amazon, some of those filled the gap completely, right, from that bull run. Right now, NVIDIA is not the case. So why did I pick out specifically $95? If you just look, that is a Fibonacci level. I don't pick out these levels out of random necessity. I don't like doing that. I like to trade technically as much as possible. So technical level is here at 105, right? That's not an accident. Not an accident whatsoever that I picked out that level. And then also right here, approximately $94. If I do fill the gap completely lower, guess where we're going? About $80, I think, is a stretch. but about 85 is where I'm looking to buy in on NVIDIA. I'm going to do leverage shares on NVIDIA. Those of you that know me, I prefer leverage shares just because when they trade low enough, we tend to do quite well on them. All right, next thing that I want to discuss is going to be Apple. So Apple had its worst day in forever. Notice the flow here on Apple. I hope you guys can see this. It might be off screen for you, but there's a lot of negative flow on Apple. Last time I took Apple, I took it at 219. Okay. Do I want to take Apple again? I absolutely do. So all things considered, Apple is the strongest out of all the tech stocks. It really is. Despite the fact that it was down 5-6% yesterday, it has not seen the sell-off or the roll-off as the other tech stocks, right? Microsoft not doing quite well. Amazon, despite it being a strong company, not doing well either. My recommendation is we wait for about 220. I'm going to give you some fib levels here. I actually want to give you two fib levels. I want to do the run from here all the way up to here. So golden area is going to put you at 220. That's not an accident level. All right. Those are not accident levels. I don't pick them out of randomness, right? And I definitely don't pick them out just because I have a particular level that I think. No, it's not about what I think. It's just about what the technical analysis says. I go off of technical analysis pretty militantly, okay? So 220. After 220, just check out my zone right here. Does everyone see that? That zone puts me in the 0.786 range on the fib. So that literally translates to 210. So that's what I'm thinking right now on Apple. I have an opinion that we break below this support level. That is just my opinion. If that doesn't happen and we start to bounce off this area because we're right on the 200 EMA and SMA, fine. Last time I took it long, literally right here. That is exactly the level that I took it long. I will try to do that again, but if I start breaking lower, 210 is my level, all right? So Apple is a very close second. Next, Google. I did take off my Google position recently because we started breaking these lows. Let's put on the fibs here and let's see exactly where these levels can take us. So let's swing from our low all the way up to our high. So does everyone see this right here? We broke below our golden ratio. Our golden ratio is 0.618. I took this position at approximately 169. And then yesterday, since it had a horrible day, I had to cut this position in a negative 3% loss. Cool. No big deal. So next stop is going to put us at about 160. All right. I would highly recommend that all of you consider buying Google. Consider. I'm not giving you an ultimatum. I'm not giving you a definitive. I'm just sharing with you my opinion. Okay. I am of the opinion that Google is going to be one of the best, if not top 5 stocks in the next year to about year and a half. All right. I don't want to get into the specifics as to why. Do your own due diligence. But the lower we go on Google, the more aggressive I want to be with my buying. All right. I've made it very clear during my power hour sessions why it is. I've already got stopped out on Google. I believe this is now the 3rd or 4th time. All of them have been extremely small losses. And I'm talking about extremely small losses, between 2 to 3% on shares. So next level is 160. And then below that, I have approximately the 155 area. I want to be very adamant about this. Google is going to be, for me, the top 3 stocks that I will be picking up. Okay. So if you see Google start bouncing, think of this session and think of some of my comments. Again, do a little bit of research, go into Google, and then, well, no pun intended, but research why Google is such a strong company and such a strong stock right now. If we do fill the gap all the way back down to 147 or maybe even 145, then you know that that's going to be an unbelievable buying opportunity. For those of you that don't know my trading style, the last time that I took Google, I actually took it at 149 right here. So I rode it from here all the way up to about there. This is where I got my sell signal, right? So when we were selling off on Google all those months ago, I was just waiting for my opportunity. I actually called it back down to 138 or 139, I believe is what I called out. But as soon as I started seeing my signs to start picking that up, that's exactly what I did, all right? So Google is going to be top on this list. Now, most of you want to ask or want to know what my opinion is on Tesla and when I'm going to start picking up shares. This is not a bad area at all. This is really not a bad area to start picking up shares. Notice that I already have the fibs right here on Tesla. I want to explain this so you guys understand this, because most of you make decisions based off comments that people like me on the internet make, but I don't want you just to take it just because I say, hey, 220 seems like a good level. I want to explain this a little bit further. When we're looking at order flow on Tesla, it is abundantly negative, obviously, right? This sold off from, it swung from its high all the way back down to its low. What was it? Let's see exactly what the percentage point was. From high to low, it went 55%. Okay. So we keep on seeing on Instagram that it's 45%. It's not 45%. It's 55%. What do we have in terms of just an interesting value proposition? Let's go. Actually, let me see something real quick. Let me go here to Tesla. I just want to see something just real quick. Give me a second on this. Okay. So I got some levels right here. And I do want to look at the voodoo lines just real quick, guys. All right. My fire line on Tesla puts me at 175. Back about a month and a half ago, I called out 330 on Tesla, and I had a couple people very angry with me. Some of you might remember, but I called out 250 on Tesla recently, right? I literally said 250 on probably 2 weeks in a row. I said we're going to be trading back down to 250. Right now we're at 222. Okay, so do not think that Tesla cannot trade back down to 180. So Tesla right now, not only are they losing market share, but Elon Musk has shifted his focus completely from being captain of the ship here at Tesla to being captain of the ship in another domain. All right. So your opinion on that is going to vary. I know that we're all from different parts of just different opinions. However, technically speaking, I'm a buyer on Tesla the closer we get to about the 190 area. Okay. So 220 is not doing it for me. Are we going to see a bounce here very soon? More than likely we will. Okay. More than likely we're going to get people that are adamant about the fact of buying the dip, or in this case, right, the complete destruction of Tesla around these areas, right? Because this area makes sense. It fills the gap. Doesn't necessarily mean that I think the value is there. For me, this is going to be an appropriate risk reward trade the closer we get to 190. I'm going to share with you what trade I actually do want to take. I'm not going to take Tesla. I'm going to take TSLL. So last time I took TSLL, I took it at $8.50. We're now down at $7. I'm telling you what I'm going to be taking, right? So usually this is for the people that are in our Discord, but I'll share this with you guys. We broke below the support level here, so we filled the gap. We broke below $9.50. I alerted the $8.50 level yesterday. We had the gap fill lower to $6.75. So the closer we get to about $6, the more interested I am in taking TSLL. Why am I saying that? The risk reward here is just going to be massive. I just want to be careful. I want to be very, very careful because sometimes I get caught in a trap where we just keep on trading lower and lower and lower and lower here. But the risk reward is definitely there. The last time that I took this, I made close to 100% on my shares. I did not ride this, right? Some of you are thinking, did he ride that? No, I didn't. I didn't ride this at all. I was out at approximately $16 when I took it the first time. So I want to do that again. If you want to take Tesla yourself, Tesla and TSLL, they're not behaving 100% exactly like each other, but I'm still seeing a potential gap approximately here, everyone, okay? That's it. That's all I'll say about Tesla. Let's go here to Amazon. Amazon is another. So this did break below my $197 level. I'm thinking now 180. I'm thinking 180, and then I'm also thinking right here, okay? I'm thinking approximately 170. So between 170 to 180, I'm thinking about rocking the house right now on some longs. Do I think that the selling pressure is over? No, I don't. I don't think that the selling pressure is over. Might we get a bounce here for CPI and PPI? Absolutely. Of course, we need it, right? We went 16% negative on the indexes, specifically on Qs, in 18 days. So, of course, we're going to see relief. Do not misinterpret that as a bottom. At least in my experience, it's usually not the first. It's usually not the first bounce. It's usually the second or the third bounce. So be careful with that. All right. Be very, very careful. Usually not the first bounce, usually the second or the third. Usually not the first, usually the second and the third. History is just going to repeat itself like it always does. Okay. So be very, very careful with dollar cost averaging into some of these positions just because you want to be in it. Last thing that I want to mention, because I only have 5 or 6 minutes here, not even that. I have 2 or 3 minutes. I mentioned before on some of these sessions that I was interested in getting into crypto. So I want to go over Ethereum. This is one of the things that I would like to buy. So we're breaking below these levels significantly. My first level was 2270. My second level was 1940. And then now my third level is 1635. Okay, so around 1635, I might look to start buying a little bit of Ethereum because I think that this is an unbelievably good support level. And I might start picking up some BTC as well. I know the crypto people are not going to agree with me on this, which is fine. And it's totally, totally fine. But support level is 76 for me, and then also 68,000. There are people that are calling for a crash on Bitcoin all the way back down to 30,000, 33,000. I'm not one of those people. I think the lowest point that we can see is approximately 57,000. All right. Those are just the levels. I'm not saying that I think it's going to trade there. Honestly, I don't have an opinion. To me, it doesn't matter because I'm not in it at all. I've never held Bitcoin ever. I bought Bitcoin 8 years ago and I made a little bit of money on it and I was good with that. So as long as we have the appropriate risk reward, it doesn't matter. If it starts bouncing from here, then the trade is not for me. If it does fill the gap lowers into the levels that I mentioned to you guys, then I might be a buyer of BTC and specifically Ethereum at that point. Cool? All right, guys. Does anyone have any questions about anything that I talked about today? Does anyone want me to go over any stocks? Or does anyone want me to go over anything that maybe you guys might be looking at? I'd be more than glad to answer those questions. Let me scroll down a little bit lower. How do you get in contact with you guys? Just send us a DM. We'll be more than glad to answer your questions. Let's see what else, guys. So pretty much buy everything. Yes. Yes, that is exactly what I'm saying. Just be careful as to when. So the stocks that I went over, just do a calculation of what has the better risk reward, right? I'm looking to put in and allocate a lot of capital, a lot of capital in something like TSLL. Not because I love Tesla. No, it's just because the risk reward is so good. It really, really is so good. Can you imagine buying this at $6.50 and just riding it up to 13? Can you imagine doing? I've done it before. I've done it not at $6, but I did it at $8. Just worry about risk reward. As we go through these stocks, you guys need to start thinking this. Stop having fealty or affinity for the stock itself. Start focusing on risk reward. So if there's risk reward, if we're back down to 180, just check out how much I can move off that 180 mark all the way back up to all-time highs. It's 30%. If you find something that's 40, 50, 60, 70, 80, 100, 150% with shares, then take that, right? Just take that. Just be mindful that not all stocks are going to be created equal, but the ones that I went over have the highest likelihood of reaching all-time highs again, right? That's how I think, right? That's how I would like to express to you guys how I think. So you guys can see, okay, he's doing it this way. Maybe I'm going to do it a little bit differently. Maybe I see something else that I think is interesting. I'll share with you guys a stock that I took. I took VOD calls, right? I took calls at 20 calls, and I actually took leaps on this. I'm waiting for that to break above this resistance level here at $10. So why did I take calls? They were cheap. They were $3 each. I did this on Nokia recently, right? Some of you are in my Nokia trade. I took this at $4.20, right when we were breaking above the 200-day moving average. I believe these are up now by 60, maybe 60%-ish. But taking the leaps, all I'm looking at, guys, is just risk reward. Is the risk reward there? If it is, I'm going to fire the trigger. So I got a buy signal approximately at 420. That's exactly where we are right here, 420, and I'm waiting for that to fill the gap up to maybe about $6. I bought 7 calls, and I gave it enough time in order for it to recover. So the same thing here on VOD. See how it is I'm thinking? I know that yesterday was disastrous. I know that a lot of you are down 10, 20, 30, 50, 100. I have a guy in my group, he's down $2 million from yesterday, okay? He's down big, he's down huge, but he's in my DMs asking me, what are we going to buy? Because he knows how this works. He's been trading for a long time, maybe longer than I have. I know we're down, but if we're focusing too much on the short term, we don't see the big picture, okay? We are definitely not seeing the big picture. So everything that I went over, if you have a stock that you like, if you like Dell, if you like QCOM, whatever it is, just consider the risk reward. Do we have good risk reward here? I would probably wait a little bit lower on Dell, close to $70, but just make the calculations. Do the calculations on what stocks have the best risk reward for your trading style. I'm just sharing, of course, mine. I'm telling you which ones that I like the most per my experience, but it doesn't have to be the ones that I like. If you like the quantum stocks, I'm still waiting for the quantum, because I bought quantum back down here, if you can believe that. I didn't catch the entire run. No, of course I didn't. I'm waiting for the risk reward to come back to me. Marvell, same thing. Is the risk reward here good to the upside? It's getting there. It's getting pretty close, right? If we trade even lower on this, if we get back down to $54, you're probably going to see me buy into that. Some of you were asking me about Hood, right? A lot of you guys were asking me about Hood. And what did I tell you? Some of you wanted to punch me in the face. I said, Hood is only going to be the appropriate risk reward if we trade back down to $45. There were some people that were very angry with me, very, very angry, because they were saying Hood is never going to be trading back down to that level. Don't be that person. Do not be the person that says, hey, we can never do a retracement of 50, 60, 70%. Of course we can. Of course you can. Maybe not on the indexes, right? The indexes generally historically have a pullback anywhere between 10 to 20%. Obviously, that's why everyone on CNBC is talking about buying those dips and buying those markets. Now, for individual stocks, especially things that are related to crypto, do not come at me and say, hey, that can't see a 50% retracement. I just drew out the fibs here, right? We're trading back down into the 200-day moving average. Am I a buyer here? Probably not. This is an area that I would try a risk reward trade. I'm going to set a stop loss at 33.50. And then we'll see if it can run from here. Now, if we start trading lower, this is where I'm realistically looking to buy into Hood, right? $25. It's going to be a target. Same thing with coin. A lot of you didn't believe me when I called out coin at 190, right? Look at my levels, man, right? Those are the gaps to be filled lower. Don't ever say, no, the stock can never, retrace 40, 50%. Look at Tesla. Tesla's retraced 55%, right? Be very careful with that thinking, especially you short-term traders. Be very, very careful with saying, hey, we can't sell off that hard. Some of you were in disarray that Tesla was selling off 15% today. It happens, right? You cannot ever think that something cannot sell off that hard. Coin is one of them. Coin is an extremely good example. Some of you were not trading. I was trading coin since its IPO, right? Do not ever say, no, this cannot fill the gap back down to 135. I don't see it. Of course you can, and wait for that. What I'm saying is whatever stock that you're interested in buying, Nike, TIGR, Uber, Tuya. I bought Tuya here at $1.90. I'm still in this trade. Always consider the risk reward. That is more important than any other technical analysis that you can do. Just consider the risk reward. That is the most important thing. Cool? All right, everyone. PE ratio on Tesla is still too high. $100 stock. I don't disagree with that. I have never liked Tesla. I have always thought it's overvalued. So if Tesla trades back down to 100, it very likely will see my entire portfolio on it, because I know that the Tesla bulls are going to be rampant on it. So if we do trade back down to 100, which I've called 105 on Tesla before. I've said that it was going to trade back down to 120, 105. I was wrong. It got back down to 140. So if it sells off an additional from where we are now, if it sells off an additional 45%, I'm going to be putting $1 million into Tesla. All right. I will be doing exactly that. Does anyone have any other questions? So how much did you buy at 250? I didn't buy Tesla at 250. So that wasn't me. Does anyone have any other additional questions? Are you going to buy TSLL instead? Yes, I am. Yes, I am. Just because the risk reward is more in my favor. So if TSLL trades back down to, it's already there, okay? But we have to consider, remember what I just said? If Tesla sells off an additional 45%, that means that this bad boy from here is going to go back down. Let's see exactly where we can go. We can trade back down to about $3 or $4 on this, right? That's even better, because that means that I can put $1 million into this. Am I saying that just to be cute? No, I'm not. I'm not saying that to be cute. I said that I was going to put a large amount of capital in the bond market. I did. I have an absurd amount of money in the bond market. So am I going to do that on something like Tesla? If the time comes, if I get exactly the signs that I'm looking for, yes, I will do that. So if I put $1 million into this, what is the multiple? What is the risk reward? I'm not saying that I like Tesla. Do not misconstrue my meaning here. I'm not saying that I'm a Tesla bull. I couldn't care less. I really couldn't care less. All I care about is valuation. All I care about is risk reward. So if I put $1 million into this, what is my risk reward? I can make $20 million on this trade, right? That's what I'm looking for. I want the good risk reward trades. I want the best risk reward trades that I can possibly find. You guys should be risk reward hunting right now as well. So if it's not QQQ, if it's not SPY, then then come up with something. I just shared the ones that I think have the best risk reward for right now. Tesla is going to be the top 5 on that. Okay. Let's see. What else we got, guys? PLTR. Let's check that out. PLTR, I shorted that at 120, right? 120, 122. Gap fill is back down to $65. That's where we're at. That's that daily time frame. I just said 65. I already had these levels on the daily, so it's between $64 to $67. We already broke below the corridor. This was an obvious short, in my opinion. Wait for those levels. What else we got, guys? NEO. What do we want on NEO? Wait for NEO to trade back down to $4.45. I did signal NEO at 420. If I would have held on to it, I would have been up a good amount. But wait for that. Just a little bit lower, close to 435, 430, and then you can look for your trade once again, right? But NEO right now, no. I'm going to say no to that. We did go over NVIDIA. So I basically said NVIDIA, just to give you guys the cliff notes here. I said NVIDIA, I called it out at 105, right? Most of you probably are not in the Discord, but if you are, you know that I called out the $105 level. That is a very significant fib level. Also, below that, I'm thinking about 95. I am a huge buyer on NVIDIA if it gets back down to 85. I am a massive buyer, and I'm not even joking. Massive, massive, massive buyer on NVIDIA. Some of you might be thinking in the back of your mind, but these stocks are not going to get to those levels. That's fine if they don't. I have 10 stocks that I'm monitoring. All I need is one to get to the level that I needed to, and that's where my energy goes. Cool? What else we got, everyone? What else we got? So should we still buy or wait? I'm still waiting. I'm not telling you to buy anything. I'm sharing with you my opinion and why I'm thinking the way that I am, because I'm putting risk reward at the forefront. So I'm not going to come on here and say buy Tesla like crazy. I'm not going to do that, right? That doesn't make sense for me to do. I have to give you reasoning as to why I am thinking about doing something. Why am I going to put $1 on this, right? My job is to explain to you why I'm doing what I'm doing. Why am I taking shorts? Why am I taking longs? Why am I buying into Amazon? Why am I doing that over Tesla? So you guys can come to your own conclusions. You guys are big boys and girls. My job is not to spoon feed you. My job is to give you the information based off my experience so you guys can come to your own decisions, right? That ultimately is what we do, man. That's our whole coaching program. Our whole coaching program is for you to come to the conclusions based off our experience so you can shorten the learning curve. I'm not going to tell you to buy anything. I'm just going to say, hey, these are the reasons why I'm doing what I'm doing. If it works for you, then you can follow along. But if it doesn't, then let's look at some other options and then we go from there. That's how I do it, all right? So bullish on Uber and Airbnb. I am not bullish on Uber, nor am I bullish on Airbnb. I just shorted Uber and I just made a little bit of money on that. So I am not bullish on either of the two. Microsoft is worth going over. I'm going to spend a little bit more time than I usually do because I know you guys have a lot of questions. Microsoft did hit my target of 380, as you can see. That is my target area. Below 380, I'm thinking 365. I'm not a buyer on Microsoft. It has too much short order float, and I believe it is being heavily shorted per FINRA's data. Yeah, the short interest is actually being built up on Microsoft, so I'm not a buyer here. I'm more of a buyer on Microsoft closer to 340. Those are my levels again, okay? You don't have to agree with me, which is perfectly fine. But with my money, with my capital, I don't trade prop firms. I trade my own capital. I was trading way before the prop firm thing even became popular. So I have the capital here that I will wait for before I make the decision. Okay, 340 is going to be my exaggerated level, but around 365 is where I'm starting to make some considerations. Does anyone have any other questions? SOXL. SOXL was my darling. Okay, I made almost $300,000 on SOXL way back when. What is the gap fill on SOXL? It is $14. I told everyone in the Discord, do not buy SOXL. I'm telling you now, this is not something that I am interested in for the time being. It's going to be $14, if not lower. $14 and then back down to approximately $11 is what I have on the table. I'm not a buyer on SOXL, not even close, right? Trump was very clear, very, very clear about his stance on chips. He wants them produced here in the United States. So obviously the chip space, the chip sector has suffered tremendously since his comments. So SOXL, unless it gets down to $14 or as low as $11, I'm not even looking at it. It's not even a consider. It's on my watch list, but it needs to sell off more than where it is from here. Okay, risk reward, guys. Risk reward. Let's see what else. Last time I asked about Lucid, and you mentioned that 225 could be a place to open a position. I did open a position yesterday, pre-market 212, sold at 225. Any other opinions with that stock? I can give you an opinion. Okay, so we're right on the support level right here. You have no indication of buying whatsoever. You see the short interest? That short interest has skyrocketed. That, for me, is a clear sign that we start seeing a little bit lower. Can I give you any historical reference of support levels? I cannot, because there are not any. You need to wait for moving averages to start lining up, but generally, I took Lucid at 215 at one point, and I wrote it up to almost $3.25. It was something like that. I wouldn't take any position here. I would wait until this right here. If you're using FINRA data is free, guys. That short interest is building up and it's quite significant. So I would stay away from Lucid. Also look at the option flow here. It's aggressively negative. Okay, so I don't have any comments for any bullish price action, and I would discourage you highly, 10 out of 10, shorting this. There's no space to do that. Consider your risk reward on any position that you are going to take lower. It's always about risk reward. It's not even about technical analysis all that much. It's just about risk reward. I'm going to be watching Lucid further down the road when it does create a support and when the moving averages start to stack up here to the upside. But for right now, Lucid is off the table. AMD is, I cannot give you an objective opinion on AMD. I really cannot. AMD has support right here at $95 on your weekly time frame. That's what it is. That's what the support level is. So we either bounce from here or we're trading back down to about $85. Okay. I have a lot of money in AMD, and I have been wrong on AMD because I took it on the 200-day moving average. I want to be very clear and very transparent. I am losing money on AMD. I'm down approximately on my shares. I'm down a significant amount. I'm almost down to the 50% mark. So in interest of full transparency, don't listen to my opinion on AMD because I've been wrong about it for close to 3 months. Objectively speaking, $85, maybe I'll look to buy into more of this, but AMD is off the table for me. I have not earned the right to do any technical analysis on it because I've been wrong on it for such a long time. I don't know where the bottom is on AMD. I have no clue. No clue whatsoever. We broke below the 200-day moving average. Some of us are calling AMD back down to $67. If I do the fib sequence here, this kind of doesn't make sense to me, but I'll do it anyway. The fibs take me back down to $95 for this particular ratio. The complete gap fill lower puts me down at 65. Obviously, the one-to-one relationship here is 55. Okay, so AMD, I'm a little bit iffy on. I have no idea what the bottom is on AMD. I'm just purely guessing on these particular levels. Okay, guys. I always like to ask for these sessions, if you found this informative, if you found this at least educational, or if you found that you got something out of this, just give me a thumbs up in the chat. And if you did not, that's okay. That's perfectly fine. Give me a thumbs down. So I know. I like to take feedback, both good and bad, just so I know how to improve these sessions so I don't waste your time when you guys jump on. I don't like wasting anyone's time. I don't like wasting, precious analysis if you guys are just not interested in it. I like to focus on where I think the attention needs to be. So just give me some feedback and then we'll call it a day for today, okay? If you did get something out of today's session, give me a thumbs up. And if not, it's okay. It's totally fine. You can give me a middle finger. You can give me a thumbs down. If you think that I'm an idiot and I don't know what I'm doing, that's okay. That's okay. No problem. We like to take feedback, both good and bad. We like to, at least I do, I like to be as transparent as I possibly can. Okay, everyone. I appreciate you, and I will see you guys on Thursday. We have CPI and PPI reports to look forward to. Be careful with buying in. Really, really be careful. I cut my Google position because it was the right thing to do. I had to do it because there's still a gap fill to be lower, back down to $30. I did not mention this. Those of you that are still on, you're going to catch this one little nugget that I'm going to give you. On GGLL, which is basically Google, I'm waiting for $31, right? 31 bucks. All right, everyone. Take care. See ya.